Okay, great, thanks. Hopefully, everyone's got a coffee, tea, or some pastries. And we've got an hour session ahead of us just now. And the first session is myself and Luke, looking at SBTi adoption and adopters. So for the next 25, 30 minutes of this session, we'll be looking to explore that topic and look at it from a Scottish perspective, Luke using a case study from a Scottish organisation, Clyde Co. So this session will be framed around me giving a brief introduction to the SBTi, to give you some context for those in the room who might not be too aware of the ins and outs of that particular framework, before handing over to Luke for the main presentation. And this will be followed by a Q&A with the time that we have left. Now, before all the introductions, before that, the introductions. My name's Colin Brown. I am, alongside Hannah, the co-chair for the Scottish Forum on Natural Capital. My day job, I'm a founder and MD of a sustainability consultancy and social enterprise. And I guess in the context of SBTi, what I'm looking to bring to this discussion is a number of my previous roles where I've led in establishing sustainability and ESG from the perspective of an ESG director at a FTSE 25 company, as well as director of sustainability at a number of global brands, including McLaren Racing. And I guess what that meant for me was having the responsibility for signing those entities up to SBTi and what it meant for us as a large entity, but more importantly, perhaps the prompt that had for our supply chain, and what they needed to do likewise in terms of alignment, compliance, or being signatories themselves. I'm delighted to be joined on stage today by Luke. Luke's the CEO and founder of Nature Broking. Luke, would you like to introduce yourself to the audience?
I don't know whether this is on. Is it on? You can hear me? Okay, brilliant. Hello everyone, my name's Luke. I'm the CEO of Nature Broking. Nature Broking is a natural capital and carbon credit intermediary focused on helping organisations, so the buy side, to build demand for nature-based credits in the UK and globally. We work with some of the UK's largest organisations, helping them build a strategy, define a strategy, and our key differentiation point is how do we create value from values. So that's what I'll be talking about today.
Excellent. Thank you, Luke. Okay then, before I give a brief introduction to SBTi in terms of an overview, I'm looking for a show of hands. If your organisation is a signatory to the SBTi, can you raise your hand? Okay, not an awful lot, a few. 1, 2, 3, 4. Okay, single figures. Interesting. Okay, so in that case then, what I'm going to do is give a bit of an overview to SBTi for those of you who might not be too familiar. And what I've done is I'm just going to read verbatim the paragraph from their website. The Science Based Target Initiative is a global climate action organisation that helps organisations set greenhouse gas reduction targets aligned with climate science and the Paris Agreement. It provides the standards, tools, and validation needed to ensure climate targets are credible, ambitious, and aligned with limiting global warming to 1.5 degrees. So that's kind of the strapline. And what I thought would be really interesting to do is maybe look at a potted timeline of the SBTi. It's well established now, 11 years, I think, in total. And what I'm looking to do here in terms of that journey is maybe give a couple of the headlines across a number of those years. So in 2015, the SBTi was launched, and it was the first of its kind. It was founded by the CDP, World Wildlife Fund, WRI, and the UN Global Compact. Moving forward, 2018 to 2020, the kind of early years, there was a lot of early gains and momentum. But crucially, what happened during that period was the SBTi quickly became the de facto global benchmark for credible climate ambition. Moving forward to 2021, SBTi launches the world's first science-based net zero standard becoming the blueprint for organizational net zero commitments worldwide. 2023, the SBTi announced the Science-Based Target Network, or SBTN, whose purpose is to provide science-based pathways to nature. 2024, carbon credits controversy, as CBTi allow carbon credits to address Scope 3 emissions for organizations. 2026, SBTi announced that they have now over 10,000 signatories worldwide. And as of yesterday, from the dashboard, I had a quick look, of those 10,000, around 1,800 signatories are based in the UK alone. Of that number, 5% being financial institutions, 50% being corporates, and interestingly, 45% being medium and small size businesses. Okay, so that's the intros done, and that's the context set. Luke, I'll now kind of hand over to you, hoping for your presentation to provide a few talking points for this session. Luke, over to you.
Thank you very much. Now, I don't like standing behind a lectern, so I'm going to walk with a clicker, so forgive me. So today I'm going to talk about how SBTi adoption is driving investment and demand for nature-based credits. I'm going to try and frame it in a dozen different ways. So if we're framing this in terms of organizations, why are organizations doing it? Let's ask ourselves, not what do we have to give, but why is someone going to buy this? So how many people here have friends outside of the sector? I'm assuming it's going to be 100%, right? Okay. When you talk about what you do they get it? Show of hands, yes? Show of hands, no? Yeah, okay, so that's the majority. Okay, so in the past, we've been looking at this through a marketing lens. People should do nature because nature is inherently marketable. But we just had over half the people in the room say that their mates don't understand what nature is. So is it marketable? So is there that question there? So I'm going to start off by talking about pre-2023. So in 2023, there was a big expose within the carbon markets. The Guardian articles came out and kind of ruined the word carbon neutral, which was to mitigate your impact. And the first thing to note is the SBTi, you have to reduce your emissions by 90%. That is the most important thing. Everyone needs to drastically, all corporations needs to drastically remove their emissions. But when it came to it, we had to mitigate impacts, and it was driven by marketing, competitive advantage, employee engagement. All of our competitors were doing it, so we had to be carbon neutral as well. But when you look at being carbon neutral, as an organization, you're then saying, well, I need to mitigate my impact, and the cost then comes into it, because the claim, the benefit to the organization that you have is, I'm making a claim that is carbon neutral. It doesn't actually matter what credits I'm buying, because it could be the most expensive £300, £400 direct air capture, or it could be £3 a ton. It doesn't matter, because the claim that I'm getting is the same as other organizations within who are claiming carbon neutral. So credits were purchased annually. There was a lack of understanding, and there was low cost and small budgets. Then this happened. As I say, in 2023, it was a massive expose about how 90% of credits, which were the majority of credits that were hitting the market, were not viable. But this meant that the marketing angle suddenly went, because carbon neutral wasn't good enough anymore. Everyone needed to be net zero, so we needed to get to that net zero point, so language changed. There was an increased reputational risk, making that claim. Suddenly, reputationally, it's really scary. You can't do that. Second part was low cost was no longer an option, and that's actually had a sort of a transverse effect. Bloody hell. Tangential, whatever the word. Request, because it pushed people to buy UK-based credits, safer jurisdiction, backed by UK Gov, moving towards that. But low cost was no longer an option, which means the budgets didn't grow with this. So your credit that you were buying at £3 a ton suddenly was no longer, you were trying to do it in the UK. Firstly, there are no credits in the UK, there's a couple, but no meaningful credits in terms of ones that you can actually utilize against a claim. So I kind of put paid to that. And your £3 a ton becoming £25 a ton, the CFO turns around and goes, absolutely not, we're not doing that. So, oh, that didn't work. But we have to remember that as part of the SBTi, a credible transition plan to net zero has to involve carbon removals. There is no way that any organization is ever going to achieve net zero or true zero without carbon removals. So if you're on a decarbonization journey as an organization, you should be thinking about carbon credits. Many of you will have seen this. Colin talked about your decarbonization journey, a 90% reduction. This should say carbon neutral and contribution, so contribution claims, and then net zero is the where you're going to need to buy carbon removal credits in order to mitigate your impact. So these are the drivers. SBTi has also just released its corporate standard version 2 for consultation, which includes from 2035, organizations will have to mitigate a proportion of their impact with carbon credits from 2030 onwards, which means that there's significant demand coming for carbon credits. So the SBTi is a key driver of carbon credits. Now, the challenge that you have here is that if we focus only on removal, peatland is essentially worthless. It's a bit of a brutal convex, but when you look at peatland, you're saying that's a reduction credit, and unless the SBTi endorses that this will become a removal credit, you can't utilize that on your claims journey, which prevents its adoption. So I know there's a couple of people from the Peatland Carbon Code. I very much say lobby the SBTi about making peatland a permanent carbon removal. So I said a second ago, value from values. How many people have read the Companies Act in here? Okay, 2. What is the core facet of the Companies Act? That's a rhetorical question, but the core facet is that as a shareholder of the organization, you have to make money for the organization. That is, at its core, basically what the Companies Act. You have to act in the shareholder's interest. Now, how do we, as an industry, act in the shareholder's interest of the organizations that we're looking at? So if we are looking at investing in nature, investing in climate, how can we look at it through the lens of not the CSO, but the CFO? And then on top of that, board who signs off the budget each year. The board that you've got maybe 5 minutes to talk about your entire decarbonization, your entire sustainability strategy, because it's not at C-suite at the moment. There is very few proper chief sustainability officers that sits on board. So how do we build a compelling business case? Value from values. So, right, we came with this with an idea that everyone was going to need to be net zero, and if we're going to be net zero, you're going to need carbon credits. Now, that is expected to drive significant demand. This is some data from Allied Offsets, looking at the global nature-based carbon removal market. And as you can see, depending on which demand scenario we're looking at here, we've got a low, medium, and high demand scenario, the prices are expected to go up. Now, how significantly they expect to go up really depends on how policy evolves, how much we can get organizations to accept that they're going to have to be net zero. And I know there's some Scott Gov people here. Nice to see you. How can we take a macro, 2050, we're going to be net zero as a country, and how does that then get put onto organizations? Because at the moment, whilst we're going to be net zero as a company, it's a legally binding thing. There is no legally binding reason for organizations to be net zero. You don't have to. In fact, we're already seeing organizations who set crazy targets in 2019. We're going to be net zero by 2025. No, you're not. Do you even know what net zero means? So we have this. So McKinsey predicts there's going to be a 3 to 10 times lack of supply by 2030. If we're going to achieve IPCC baselines, which is the International Panel on Climate Change, every person in the world is going to have to remove a ton of carbon per year from 2050 onwards. That's 7 billion tons that is going to need to be removed from the atmosphere in order to come even close to achieving a 1.5 degree transition. To put that in context, the global wheat market is 800 tons per year. 800 million tons per year. So a scale of 10 times higher we have to remove from the atmosphere than we create in wheat globally. So that's the scale of the opportunity and why we must incentivize private capital to come into it, because public capital is not going to be not going to be enough. Public capital focuses on B's, private capital focuses, on B's, private capital focuses on T's, billions, trillions. So there's a huge amount of capital out there that needs to be deployed, but within the context of how do we make money from this? If you're an investor, you're not doing this because it's philanthropic, because again, coming back to the Companies Act, we have to make money for our shareholders. That is our role as an organization. And this is meaning that these demand scenarios are showcasing that there's a 50% increase in the number of large offtakes that are coming into the market at the moment. Seeing that with the likes of Microsoft, people locking in prices now for future use. So Then, how do we maximize the benefits to the organization? So making sure that we're developing the right solutions. How many of you have investments? Cool, yeah. How many of you put it all into one thing? Put it all on Bitcoin? No one, right? So why are we buying from individual projects? Why are we not creating effective, diversified portfolios and standard risk mitigation mechanisms to aggregate risk across different solutions? So bringing a more sophisticated product to market where we have a more sophisticated supply chain. When you have all suppliers going to all the corporates saying we've got these great projects, are they able to create real, meaningful, de-risk portfolios? It's also about the location of projects. How do we then go and visit the projects, engage with the projects? How do we maximize the co-benefits? How do we then choose what type of impact we're having? How do we choose the split between nature-based versus technological-based if we're buying forward? But we must make sure that if we are buying forward, we de-risk it. So we're making sure we're using the highest quality projects, the lowest risk, taking a portfolio approach, but also using insurance as a key driver. So if we're looking at through the lens of the CFO, not the CSO, we've come to them and said, you're going to make a load of savings by doing this now. Here's an accurate forward pricing curve. Here's an accurate view. We're building brand value from the credits that we're purchasing. We're de-risking it through portfolio metrics and standard decarbonization methods, and we're then putting an insurance overlay over the top. So suddenly your conversation, have I once mentioned what projects that we're doing? Oh, it's great because it's got co-benefits. No. What I've mentioned is I've said, here's a really credible business case. How do we make sure that we're hedging against future price risk? We're choosing the projects to maximize the benefits. We are de-risking it through insurance, portfolio, and other solutions. But there is one fundamental issue with the carbon markets as a whole at the moment, is that every credit that gets bought ever across the world is a profitability hit. It gets immediately expensed to your P&L. So what does that mean? That means that every credit you buy is actively reducing your profit margins as an organization. This is the fundamental issue with the carbon markets as a whole now. So as we look at this, we go, okay, right, well, what is the challenge with investing in nature? Well, if it's an expense, it hits the profitability, it affects your profitability. Great, well, what's the lowest common denominator? We always have to make money for our shareholders. So the lowest common denominator is then cost. So we're going to do this in the cheapest possible way because it doesn't create value for business. We as an industry, because I was told to be a little bit controversial, don't make value for business at this point. So how do we solve that? Well, we think about how do we capitalize carbon credits as an asset on a balance sheet. So this is the work that we're doing at the moment. If you're buying forward of an obligation and you believe that credits have value, then they have value on a balance sheet. So you take it out the profitability expense, you place it on the balance sheet, you have something. You have something of value. And what this does is this allows the narrative to go, well, doesn't it? Again, we're not mentioning projects, we're not mentioning all the cool things that the projects are doing. We're saying, we're hedging against future price risk, we're de-risking it, we're maximizing the benefits for us as an organization. Oh, and by the way, we're creating value. So that £100 a ton credit that you've just bought is £100 for your organization. Reframe the narrative, speak the language. And this is not just an ethereal kind of Luke standing up and preaching to the converted. This is happening. So we recently worked with Clyde Co. Some of you may have seen it, announced at the last Nature Finance event, where we worked on this. Sorry, this is the total business. I'm just going to skip forward. I've missed a slide. Oops. So we worked on this with Clyde Co. Clyde Co. were buying 10,000 tons of credits per year for their net zero date in 2038. What they did was they came to us and said, build us a blended portfolio, de-risked. We want to hedge against future price risk. They estimated that they could save somewhere between 10 and 12 million quid by starting today compared to starting tomorrow. So building a credible forward pricing curve. We put an insurance policy around it, which means that their investment was de-risked, which then critically meant that they could capitalize it on their balance sheet as an asset. By capitalizing it, the argument was, we're going to hedge against future price risk, we're creating value, and we've de-risked it. Tick, tick, and tick. I haven't mentioned in this at all the word integrity, because how many people make investments based off integrity? But what does integrity mean? See, I don't see a lot of answers here. How many people go into, your investment, your IFA, you go say, hey guys, look, I'm going to buy this house because it's really high integrity. No one, right? So what we want to do is we want to think about the language that we're utilizing, because outside of this room, we know this language. We know integrity, TNFT, TCFT, ISSB. We know all of this. But to the person that gets 5 minutes pitched once a quarter about sustainability, they don't have a clue. So how can we transition the narrative to being something a little bit easier to understand for people outside of the industry? And so these are my 3 asks. So my recommendations for 2026. First is update our language. How can we be in better conversations with board? How can we align ourselves to the financial institutions and the financial, the conversations that are happening at board level and make it more effective? How can we lower friction? How can we make it as easy as we possibly can for organizations to buy these units? How do we take the ideology out of this? Oh, people shouldn't be able to, sell them on. Why? Why should people not be able to sell them on? That creates liquidity. It's in every other market that we work on. So let's lower friction. Let's standardize contracts. Let's make it as effective and efficient to generate real markets. Because at the moment, it's not a market. It's a series of fragmented projects all trying to sell to about 5 people. Okay? And then lastly, start with business. So if you're developing a project and you're thinking about the project that you're doing, don't think, wouldn't it be glorious to do a BNG unit down in the bottom of Devon? Go, where is the planning applications going to be put in to build the 1.5 million homes? Think about it in terms of, will I be able to do this at a cost that will work for the businesses I'm working with? And then engage with business before you go and do projects. So thank you very much for me. I was told to be a little bit controversial, so forgive me for that. I very much believe in this market. I think it's great, but thank you for listening.
Excellent, thank you, Luke. Look, we've got about 10 minutes now. We'll have a bit of a Q&A. What I'm hoping to do is get a few questions from the floor, but maybe to kind of kick us off, in terms of bringing it back to SBTi, why do you think that's an essential starting point for organisations when addressing this issue? From a boardroom perspective, from a corporate perspective, SME perspective.
Because I think it's about the...
Press on.
I'm okay? Okay, cool. Yeah. Because it's about the claims that you can make. There's so much risk. Everyone's talking about greenwashing. Who's heard of green hushing? It's the direct opposite. We're doing great things. Oh, no, we're not. We're not talking about them. They have no tangible benefit to us. We're just doing great things and getting on with us. So the SBTi and frameworks like the SBTi creates a structure for you to make a credible claim, which de-risks it. Ultimately, coming back to one of my earlier slides, reputational risk is massively challenging with the sustainability movement. So having from the SBTi a clear guideline at what you can claim and having someone third party and independent to go, yep, you're bang on, or you need to work on a couple of things, is a really effective way to get corporates to engage. Because also, this is all new. How long has sustainability been around, realistically? 3 years? Then it was ESG, then it was CSR, then it was just, charitable donations. It's not been around for a long time, and therefore making sure, or it has been, but in different guises, making sure that you have something that you can credibly claim is really important because it de-risks it from a reputational point of view.
So that kind of de-risk perspective, from an investor's point of view, from an organisational point of view, they're looking for transparency, accountability, assurance, more so now, and probably crucially evidence. How do you see what SBTi do and the framework that they have? How does that lend itself towards delivering on that front?
I think, again, it provides clear guidelines. It's a standard. It gives you, we all know standards here. I know there's a lot of projects here. We know what we have to do as projects to adhere to standards. And it's the same for corporates. Lacking standards, people make claims, and that's what led to the big 2023. Coming back to my point about integrity. Integrity is crucial across projects, contrary to what I was slightly bombastically saying. But it's about low risk, well-governed projects that understand what the ultimate risk to the end buyer is going to be, as well as the project. So making sure that we understand that. That, in a nutshell, is integrity. I just think it's framed in the wrong language. It's risk, governance, and quality.
Yeah, language is key. In terms of accessibility, one of the benefits, I think, of the SBTi in particular, is that it lends itself both towards financial institutions, corporates, and SMEs equally. And I don't think there's any accident that the SME numbers are as high because of that accessibility. There's also the impact of the waterfall effect, where an organisation, corporate, may well sign up and looking for the whole supply chain to align, be compliant, or indeed sign up themselves. Kind of last question for me with regards to SBTN, which is a science-based target network. What do you feel will be the impact of that particular framework?
I think really important, because you have TCFD. TCFD doesn't make you buy carbon credits, right? It's a disclosure framework. What is my risk as an organisation from a climate point of view? It's saying, okay, well, if sea levels rise by 2 meters, this is slightly perfunctory, but if sea levels rise by 2 meters and I have a water treatment plant that's 1 meters above sea level, that's going to be a really terrible situation for me. So I can't do that. And TNFD is applying the same frameworks. What are the risks and issues? The SBTN, I believe, has a nature positive part to it. So how do we create impacts outside of our supply chain? And so I think TNFD is an unbelievably good metric of working out what your biodiversity risk is, but it doesn't necessarily lead to action. So having something like the SBTN is a good form of gaining action from the top of it.
Excellent. Sally, we have Charlie Henderson here from the SBTN. Charlie, can you maybe give a bit more kind of colour to that?
Yeah, happy to. So, hello everyone. I'm relatively new in post at SBTN. I've been working for two months. And just a couple of words of introduction about what SBTN is. So, like SBTi has set guidance and standards for the atmosphere, for carbon emissions, SBTN, we've considered the other realms. So we've considered fresh water, land, and oceans. And we've set we've created a set of guidance that businesses can follow to set targets for those particular realms. And we've got our early adopters like GSK, Holcim, Caring, who have adopted these targets and gone public on them. We've also got a large number of businesses going through pilots and committing to set targets. And ultimately, our objective is to follow a similar trajectory to SBTi. We started many years later than they did, but ultimately we want 10,000 businesses, validated businesses like SBTi has got. And I think it's relevant because it's driving investment into nature specifically.
I love that GSK have joined that, because I think one of the most interesting facts I found out recently was that 50% of all medicine comes from nature. So 50% of all nature, the latest cancer treatment comes from the periwinkle tree in Madagascar. So from a risk perspective to the likes of Big Pharma, not having any nature is basically your R&D lab completely destroyed. So I just think it's really interesting looking at the risk and who's adopting the SBTN early doors, because GSPK is a massive organisation, but they must have realised that if we don't have native African forests that can present us with the next periwinkle tree, then they're in bad straits.
Yeah. I mean, I'll just briefly mention the sectors that are adopting at the moment. So we've got real estate, pharma, food and bev, textiles, forest products. I was on the phone to Taiwan this morning. They're launching an initiative. Brazil, Mexico. So this is a globally applicable set of standards, and there's universal interest in it, which is great.
Excellent, really encouraging. We've got a few minutes now where we'll look to take a few questions from the floor. I can see a hand at the back, front, and a few at the side, Sally.
Thank you. Ross Lilly, Head of Natural Resource Management at Nature Scott. If you're going to start getting corporates to think of carbon credits as assets, the business, isn't it a logical end result of that for the corporates to think of it, to buy the land that the carbon's on, because that's got a market already and it de-risks it?
No, because I just, it's not capitally efficient. Ultimately, we take, some of the estates that have been bought that have then tried to be sold, haven't made their capital back. So it's really, can they be capitalised as intangible assets? And actually, can it be seen more like stock, shares and equities rather than land assets? So yes, you will see massive corporates doing this. So, the likes of Aviva buying can't remember, the Dorian, is it? Something like that. Glen Dye, sorry. And we're seeing, Oxygen Conservation and others buy land. But I have have a feeling that the word is out as to whether the land acquisition model actually works from an investment point of view. So no is my answer. I think it would be much more preferable for people to buy credits at £50 a tonne that have come from existing communities and landowners, rather than buying at £150 a tonne because you have to bake in the cost of land acquisition into it. Whoever speaks, stand up and say your name.
Yes, hi, Renee Kirklees-Emmons, Peatland Codes Manager. So I really enjoyed your talk, and I think SBTi is absolutely a good thing, but like you mentioned in your talk, it is a massive blocker for peatlands and peatland restoration and private finance into peatlands. You said we should lobby SBTi. I have been for the past 3 years, probably 4. I have had multiple conversations with them. We have written to every single consultation. We are currently writing a paper to publish in the scientific literature to kind of back up why active emission reductions from peatlands are as valid as planting a tree towards your net zero. They are not listening. So, but we do need that private finance. So I kind of like a question to you, but anybody in the room, of like, how can we unblock this? Because it is really, really key that it gets unblocked.
I think the key facet here is speak to your government colleagues. I think the SBTi is a de facto standard because there's no actual standard, right? Like, there's no way of as a company making a claim underneath some sort of mandatory framework. ISSB will work towards this, I think, and so as long as it is mandatory, I think we said aiming to do 2027. I think that the reform wind might blow in the wrong direction there, so we'll see whether that does become mandatory. But if government then said, you can adopt the SBTi, that's going to be our choice of standard, but we will allow you to use carbon credits from peatland in that conversation, then that will be the unblocker. So for me, it's a question of, well, okay, there is no standard. People want to make credible claims, as I've been saying. So how do we as an we as a country make it so that it's okay to use those credits? Because people don't want to use those credits at the moment because the reputational risk is too high.
We're almost out of time,
Yeah, unfortunately we have run out of time, but there have been quite a few hands obviously raised there. I think getting the time sign. I think what we'll do is kind of wrap up there, but we are available throughout the day. Please do utilise the lunch break to ask Luke and Charlie any questions relating to what you've heard just now. What I also want to mention is all the slides today from all the presentations will be issued post this event.